Let's get to Steve Leisman, bring him into this conversation. Steve, I know you've been listening very intently to this. What is expected tomorrow is 25 basis points. How do you think the Fed is going to telegraph the next move?
Yeah, that's a good question, Melissa. And I think listening to the conversation, I think the way to think about tomorrow's meeting is a day when the Fed puts its cards down and we figure out, did the market guess those cards correctly? Let's think about it. There's 25 basis points tomorrow, and the 25 basis points in May and June, the next 100 basis points, that's already done. You guys are out there living, let me just put this down. You're already living with 130 basis points of tightening. Tomorrow's quarter point is done. The next two are done. We're done all the way through. We priced in 6 months. Pretty much done. You're already living with that. What's happening tomorrow is that Powell's going to put his cards down, the Fed's going to put their cards down, and we're going to talk about the 6 months or the year after that. That's really what the debate and the question is about. You're already investing in figuring out things. I'm talking to CFOs that are living with higher rates right now. When you talk about what the Fed has done, it has engineered a tightening of financial conditions. The financial conditions are tighter. If you look at the stock market levels, they're tighter when you look at fixed income levels. So tomorrow we look at the forecast of the Federal Reserve, and then we hear how Powell attenuates or does not those forecasts to say, this is where we're going. My best guess on this is he doesn't see any more than you guys see through the fog of war here and the uncertainty created by what's happening with supply and inflation. So what I think he does is he tells you, hey, you guys are probably right and okay for the next 6 months. Beyond that, I'm going to come back in June or so. Well, we'll be back before that, but fundamentally in June, and I'm going to tell you about the next 6 months after that, because frankly, I can't see what's going on right now beyond that.
How does that make you feel as an investor, Tim? 6 months is okay, but after that, we've got no idea.
Well, it makes me feel fine because I don't think the market needs to have an idea out a year and a half. I think the market needs to understand really where we're going to be. And Steve's point on the Fed is ultimately not in a position to understand the dynamics. They're going to tell us that they're data dependent. This is that communication factor. I just, a couple things here. I think this is an independent Fed. I want to believe our Federal Reserve is very independent. And I know people think that once Powell got reappointed, he turned into the hawk. That he is, by the way. Check out the history. And I know Steve knows this because he studies the Fed. And this is a Fed chairman who I think is more hawkish than his two predecessors. And I think it's something the market should think about. But we get back to a place here. The one thing I'm the most worried about, especially back to the labor market, is, you walk around and you try to go out to dinner, you try to do various things on a reopening trade, and you realize that the labor force, there's not enough people working. I think in 6 months, those jobs aren't going to be there for these people. I'm telling you, I think we're in a place here between inflation and between where the headwinds in the economy are from the Fed and credit. I actually think that the labor market, which the Fed so very well targets, is going to be their biggest issue.
Steve, it's interesting. You mentioned the market's priced it in. I agree with you that the bond market is priced it in. And I know your answer in some form is going to be, that's why you guys do this show. But just your opinion, do you think the equity markets have priced all this in?
I do think so. I think when you saw the shine come off of those crazy multiple NASDAQ stocks, and then you had obviously a rotation out of the we are going to be staying at home forever stocks or valuations on stocks to sort of more reasonable valuations in some of those things that went nuts during the pandemic. I think the market's adjusting. And if Powell's done anything well, I believe he's engineered this in a way that doesn't stop the market from falling, but keeps the market from having a systemic risk taper tantrum type issue. I think he's going to say, look, I'm sorry that you guys bid it up here and you kind of did it on my say-so, which is, I think that's a problem ultimately. But at the end of the day, he's had this long ramp up to this moment here where he's first hiking rates. But I forget who was saying it earlier. The Fed has started this back at least in November, I think I was on this show, right, when we had that argument on November 29th or 30th when Powell made that pivot, and that was a hard pivot, and the market has reacted. And so we are well down the road. You're not going to be going into the cold water for the first time tomorrow. You guys are already, I don't know, maybe ankle to knee deep in where you're going. And then the question is, do we go straight to 2%? Do we have to go to 2.5%? It's all going higher, and the question is the time period for the adjustment. I think Powell is cognizant of that. I think he's cognizant of the idea that he doesn't want to have a major hiccup. He wants to give the market time to adjust. And I think Guy was talking about, yeah, this market can take a quarter, it can take a half. It's already taken 1.5. It's already pretty much in there. What is the 2 years, 130 basis points higher than when I was on here on 11/29. I actually marked that date. The 5-year, which, by the way, right now, if you're a business and you're going into the market to get funding, you've got to deal with the spread over the 5-year, because that's sort of a place where businesses does business, that 5-year rate. That's 100 over. So you're already dealing with that. It's in the economy. I think that's kind of good news if you're thinking about getting together. But you got to say, okay, all that is true. We know that. It's like we can understand it. But the problem becomes understanding how this next wave of price hikes works its way through the system. Does it create a drag on demand such that we have this high inflation and this issue of lower growth?
Steve, good to see you. I'm sure we'll see you tomorrow. Lots. Steve Leisman.
Big day tomorrow. Going to be fun.
Yep. Huge
Put the cards down.
Day. Brian Kelly. How do you think tomorrow's going to play out?
So listen, the market is set up actually for a relief rally. If you look at, we've priced in, as Steve said, we've priced in an awful lot. As long as Powell doesn't screw this up, I actually think the market could be in for a relief rally. Now, relief rallies and bear market rallies, if that's what you want to call this, can be actually pretty extreme. So I think there's the potential for that. Let's put it this way. I would not want to be short this market going into the meeting tomorrow as a trading position.
I think there's volatility either way, but I think that they're not going to give us the full information. Steve talked about all their cards on the table. I don't know that we'll hear about balance sheet issues. If we do, that could move the market a lot.